Good afternoon, everyone. Thank you for coming. It's very exciting. I think all of us flew in either yesterday or today, so apologies in advance if we're a little jet lagged. Okay, so what I thought we would do is we would start off with introducing our speakers. I'll have them self-introduce since they know their bios better than I do. And I'd ask everyone to introduce themselves and also their organizations, except for maybe Stanford, which we already know a lot about, that little university somewhere on the West Coast. But in all seriousness, introductions to yourself and your organizations. Is that okay? All right, so maybe we can start from Chris and work our way down. Thank you.
All right. Hi, everybody. Chris Shen. I'm a partner with Novo Holdings. Kind of wear two hats here. Probably the reason why I'm on the stage. One, I head up medtech investing for Novo Holdings. Novo is the asset manager for the Novo Foundation. Yes, it does have a connection to Novo Nordisk. We are the controlling shareholder of Novo Nordisk, so dividends flow from Novo stock back into the foundation. So you could just say it's Ozempic money. It's the easiest way to understand it. But we do, probably have the largest private endowment in the world now. I think over $170 billion. We invest a significant portion of that to grow the foundation's capital. It's very much for profit on our side, so buy low, sell high. And then the foundation side gives it away, about $1 billion a year, into a variety of life science and deep technology type projects across the globe. Just a little word on what we do on the venture side of Novo. So we invest into primarily biotech and medtech therapeutic investments, usually, probably Series A to kind of Series C, typical check size between 20 to 60 million per round. On the medtech side, it's usually kind of clinical stage or beyond. Biotech side, we can start at kind of development stage, lead candidate, that type of thing, SAD, MAD data, and then kind of move on from there. But we're investing probably on the order of about $700 million a year annually into new and follow-on investments. So pretty good size amount of money. And we do kind of span the globe in terms of what we do. So very global. We have offices in Copenhagen, London, Boston, San Francisco. We have an Asia team, but they usually do like kind of late stage private equity deals. Just so if you hear about Novo Asia, that's a separate group than what we do. Just briefly on my other hat. So I have been involved with Singapore now going on 15 years as the founding director for the Singapore Stanford Biodesign Program. It's evolved. It was funded by A-Star as well as EDB in the early days and continues to be supported by A-Star ever since. So that's a program that trains postgraduate fellows in biomedical technology, entrepreneurship, problem solving using a design thinking methodology. We've created a number of different companies across the world. We have programs that span now not only Singapore, which was our second foothold, we also have India, Japan, Brazil, a lot of other places as well. So there you go. Nice to meet you all.
Hi, everyone. I'm Dima. I'm the co-founder and managing partner for BioCapital. We're an early stage deep bio fund, so we invest across the full technology stack of engineered biology and gene therapy and gene editing, cell therapy, targeted therapies like bispecifics, ADCs, T-cell engagers, and so on, RNA medicine, heterobifunctional molecules, glues, and so on. So essentially everything that's rationally engineered, doesn't involve random search, and can be impactfully translated to answer unmet medical needs. We are currently investing out of our Fund 3, going to our Fund 4 pretty soon. We are honored to be a recipient of the NUS Enterprise Investment in our most recent fund. And my other hat, which I'm also wearing today, I assume, is I'm on the investment committee of NUS Enterprise. in terms of our go forward kind of strategy and interest, we're going to talk a bit about that. But we're very interested in the convergence of everything that's happening on this panel. So biodesign, robotics, and deep biological engineering. And we think they're all going kind of in the same direction. And so directionally, we're an investor into that road.
All right. I'm Oussama Khatib. I graduated from Surpayro in France and came to Stanford to do a postdoc. Never left. Stanford is an incredible place if you really want to do research, and we agree, I think, most of us. So my research has been always in robotics and its application to the real world. And robotics is a very challenging domain because it requires a multidisciplinary approach. You need to design sensors, you need to design mechanisms, but also you need to control them. You need to deal with the programming, you need to deal with what we have today in terms of intelligence through machine learning, AI. You need to do a lot of things. But the fact is, these machines still need the human, and you need to develop human interfaces to work with those machines. And so we have robotics, we have the interfaces that rely on haptics, and I became expert in haptics, robotics, human motion understanding, motor control, because you want to understand the human motion in order to create robots that are capable of working with human-robot interaction. And then when you start interacting in surgeries and medical application, you need to create proper interfaces with the feedback and the knowledge and the sharing among other experts who might intervene while you're processing. So it becomes a really interesting, challenging environment to connect with robots. Hi, Marcelo. So, Marcelo is one of my colleagues here at NUS with whom we also share a lot of our work in robotics. I have this idea of coming and spending my sabbatical here at NUS every year, and I think it's coming up in January, right? Yeah. So, I finally decided, really, if we want to work together to create the robot that will connect research to the real world, well, then we need to bring people together. And I started a center similar to this, little bit smaller, focusing on robotics with 35 faculty from across engineering, medicine, sustainability school, business school, humanity, everyone who is touching and interacting with robots. And this is the SRC, the Stanford Robotics Center. And the center focuses on bringing people together, not just to write proposals or report, but really to work intellectually and bringing the real interaction among their students to be proactive in creating the future of applications for robotics. So we have challenges in medical robotics, we have challenges in assistive robotics, domestic robotics, field robotics, and all these different areas. And I'm very excited to be here today because what we see with iCube is an amazing connection between the very important component of bringing technology to the real world, which is bringing creativity from the university, from academia, connected with investment, and connected with all those who have entrepreneurship desire to really to move things. And this is what we see here today. And it's really great pleasure to be with you.
Hi, good afternoon, everyone. It's indeed an honor to be among such an esteemed panel, and I was just wondering, how do you go after all these amazing achievements? But I think for me, I'm fortunate to be part of 22 Health Ventures. So I work with a team of very experienced and talented and capable group of people who are entrepreneurs within the healthcare space, as well as financiers and even operations specialists. So just to share about 22 Health Ventures, we are early stage healthcare venture fund, and we are actually based across the US and anchored in Singapore. So myself, I represent the ecosystem. So I'm based here together with our founders and our researchers who are very keen to actually commercialize their research. So in case you're wondering why 22, I think I'm far beyond that age by now, but what it means is 22nd century healthcare, right? So if you think about the future of care and what we need, which might not be just acute sick care, right? It's about having capabilities and models of delivery that are yet to be developed and yet to be scaled. So in terms of our focus, I would say I'll use 3 Ds to describe. The first D is the data and digital component, meaning to actually bring the environment of care into the digital space, because from that, you get to make use of the insights that come from the activity. Hence, the second D to us is about decision making. So if you think about augmented AI capability, clinical decision, augmentation, precision medicine, future therapies, all that requires an extra layer of digital decision making. So that entire focus will be our second pillar. And then thirdly, if you think about the delivery of care, which is the third D, it should be continuous, it should be beyond the 4 walls of a hospital or facility, and it should be way early on the disease presentation stage, right? So that's kind of where we are coming from. From an investment perspective, we are usually at the pre-seed, seed level, and we do a lot of mentoring and founder development, because from an early stage fund perspective, that's how we de-risk our investments, and we prepare them for the later stage funds to follow through, let's say probably a post-A or Series B onwards. Just a bit about myself, how I got myself involved in this. I started my career as a clinician, and in fact, I used to be part of the orthopedics team at National University Hospital. So when you are seeing patients every day, you're running theaters, you are clearing clinics, you begin to ask yourself, the way we are delivering care could probably be improved from a design perspective, or the way we bring technology into care should be more holistic and not just like point solution based, right? So with that, I started on my journey. I've been through various roles in terms of when you think about all the stakeholders involved in transformation and innovation, be it from payers to producers to the technology side, etc. So that's been my journey, and now I'm wearing an investor's hat. So happy to share kind of the learnings that we've seen so far. Thank you.
So we have on the panel, I think, a really amazing representation of, I'll call it buyer in Chris, because he talked about buying low, selling high. And I think in our previous conversations, this is a theme I took away, and that we'll talk about the practical realities of that in the current market and current geopolitical arena. Builder in Dima, who has worked at the earliest stages. You didn't talk about your scientific background, but I know of that, so I'll just mention that here. Working side by side with scientists in the lab, incubating pre-company concepts and driving those forward into first check investments. Innovator, I think it needs no introduction, Oussama Khatib. I think we have many companies have spun out of his work and the work of the center. And I think our own Ben T was one of your students. Is that right? And speaks about a lot of wonderful and exciting and fun times at Stanford, and the voice of the ultimate customer, the clinician, the patient, in what Chet has shared with us. So I think these are all amazing perspectives, very relevant for healthcare, and essentially bring all of this innovation to light takes these and many other partners. So thank you all for being here. I thought, about the questions that we were going to ask of this panel, given their global perspective and deep experiences across the board. And I wanted to ask some questions that might result in controversial statements. And I think all of our panelists here are very used to this. So you might hear some perspectives that hopefully won't end up on CNA. I'm looking at the camera right now, but anyways, we'll edit those out. Oh yeah. So Dr. Khatib will just be flying back and maybe not coming for his sabbatical after all. So, okay, but with that introduction, all right. So, I wanted to ask the questions I think are in everybody's minds who are in the investment and company building space in biotech, life sciences, and healthcare. So, one of those big questions is, against the backdrop and of all the geopolitical changes that are going on and the broader macroeconomic realities we're facing, there are some seismic fundamental shifts that are remapping where we do business, who we do business with, and where we will do business in the future. U.S. is realigning their priorities. I guess that's a nice way of saying what they're doing. And some are worried about the dismantling of the scientific talent infrastructure that has given rise to U.S. dominance in the past decades, particularly in biotech and healthcare innovation. China, once regarded as a cost-effective partner for preclinical development, is fast becoming a must-visit destination for innovative biotech asset shoppers, and hotspots emerging in the rest of the world, including Switzerland, where I know Dima has a lot of experience, and South Korea, making waves with prominent deals in the past several years. So the questions I have for our panelists, and we'll start maybe with Chet and work our way down, and feel free to hand off the mic to each other as you get to know each other. Do you see these shifts, these shifts in the geopolitics and macro giving rise to remapping, or is that just in my own head? And are these shifts permanent or temporary? What does the new world order look like for our industry? And what opportunities and challenges do you foresee for innovators? So shifts, remapping, permanent or temporary, new world order, opportunities and challenges.
Thank you, Donna, for the question. And I think for full transparency, 22 Health is a US GP fund. So by the same time, I think we value a truthful opinion about this, right? So I think in terms of what you mentioned, we always believe that the shifts or change will always be constant. It's about how quick they are, right? So the way we view the recent changes from the US is that the change happened quite abrupt. And when that happens, there's always the uncertainty, especially from investors' perspective, and that has caused some of the crisis, or I would say opportunity. Now, I would leave the audience with, I think, a framework of how we think about it. And we think about expertise, which is where the innovation and research lies. But at the same time, we also think about the ecosystem, which is that whole structure of be it soft and hard assets, which is like people, culture, universities and research. But for us, the last E is also important, which is we call the entry, which is a market entry. So US to us is still the market where innovation has the highest opportunity and the widest flexibility to actually take hold, right? And you're thinking about, especially when it comes to the digital space or AI, it is still the number one market, right? But if you heard of this saying where the US likes to say that for every dollar they spend on innovation, 60 cents to the dollar is for the rest of the world, right? It's a slightly not so positive statement, a bit of arrogance if you ask me. But now if you think about it, if that equation were to be true, there is opportunity for other geographies and other ecosystems to take over that part of that 60 cents to a dollar, right? So to me, that actually shifts in terms of where the expertise could lie or could create an ecosystem, with the idea that for now, the end market, the entry is still the US. Because I think from an entry perspective, no doubt if you are talking about supply chain or manufacturing, that itself has fundamental shifts because of the tariffs and all or whatnots. But when it comes to innovation, I think it's still very much a global agenda, right? So for me, my takeaway is the end market, I think, still remains the same, meaning US is still very much a top market to gun for. But in terms of where you source your information, and coming back to ourselves, how we execute this strategy is that we actually source from Singapore as a gateway to Asia. So for us itself, the fund is designed to bring IP and expertise from all around the world, from this part of the world, from Singapore as a gateway into the US market. So that's basically my comment.
Thank you, Chet. I want to go a little bit out of order because I was having a conversation at lunch with Dima, who has, I think, some very strong opinions on this topic, maybe as a counterpoint, maybe some are aligned. So let's spice it up a bit.
Sure. Okay, so I'll try and break this because these are all united but somewhat disparate points. So I'll try to go near term, mid-term, long-term, right? Because if you're an investor, you want to be near-term safe, mid-term successful, and long-term directionally correct, right? If you're a startup, you want to be near-term operationally viable, mid-term successful, and long-term directionally correct, right? Still, so we have in between the startups and the investors and the academics, which I think take the majority of people in this room, there is good alignment what we care about. So let's talk about that, right? Near-term. The biggest near-term thing I don't hear a conversation about is the decline in the US dollar and the US dollar inflation. Nearly every investor of consequence in the world is USD denominated. Now, a USD fund of $100 million 5 years ago bought you 50% more stuff in real terms globally than it buys today. And that's very important. If you're an early stage startup that raised a $5 million seed 2 years ago, your outlays for Chinese services, European services, Chinese manufacturing are meaningfully higher in US terms. Also, in US terms, there's been 7, 8, 9% real terms inflation onshore, which led to salary growth, and the wage growth grows your OPEX onshore. So near-term cash needs have been significantly impacted by the US government policy, right? So this is the first thing to consider. The second thing is the midterm. So what is going to happen midterm? Yes, midterm, there is realignment. Midterm, there are two bullies on the playground. And the only thing they care about are themselves, right? Have no illusion. We're a UK GP. The UK is supposed to have the special relationship. The special relationship in this world means we're not especially screwed as compared to most other people who are more screwed by both sides, especially Switzerland. So what does this really mean? The knee-jerk reaction in an environment like this is pick a side. Yeah? Hey, we're going to align with the US here. We're going to align with China. Some people down there already, South Koreans are more aligned with China. Israelis, of course, more aligned with the US, and so on and so forth, right? So I hear this thesis from Singaporean founders like, hey, I'm trying to look more like a US company. I'm going to raise my capital from the US. And I'm here in a more privileged position because a third of my capital comes from the US, a third of my capital comes from Asia. So I try to be unbiased, and a third from Europe. So the reality is, I think the people who are going to suffer the worst damage are neither the US nor China. The people who are going to suffer the worst damage are all the mid-tier ecosystems. So these are Japan, South Korea, Britain, Switzerland, Singapore. Now, the rational solution for all this is to band together. The unfortunate problem is these ecosystems don't have good enough piping in between themselves. And US is actually trying to actively fix parts of this, right? With like the Munich side, like with bringing connections to the Brits and the Japan side and so on and so forth. So there's like a lot going on there. But midterm, we really care and we should work much more on building better piping in between the range ecosystems, because this is the unaligned block, if you will, in an ideal world. So that because the future of any startup in Singapore depends on being able to access but Australian trials, US capital, and US clinical infrastructure, Chinese manufacturing, Chinese clinical infrastructure, and so on and so forth, right? We cannot pick one side and stick with it because they don't need us. That's the unfortunate truth. Long-term directionality favors Asia. Because one thing you have to think about, if you're a preclinical startup today, you do not care about the total addressable market of 2025. You care about the total addressable market of 2035. The time of 2035 in any meaningful non-communicable disease is very different. The vast majority of growth in oncology, hematology, neuro, liver, lung is going to come from Asia over the next 20 years. Rapidly aging populations, ecology not so good, oncology a disease of old age primarily, and so on and so forth. So if you're interested in rolling out meaningful NCD therapeutics, then directionally in 10, 15 years, you cannot live without the Asian markets. And so whilst I agree that today your number one market is in the US, and if you're a much faster GTM things like e-health, then you should be heavily prioritizing US. But if you are in a slower market like my market, I'm a preclinical investor in therapeutics, so I invest in stuff when it's 9 to 11 years from the market, typically. This means I have to deeply, deeply care about the cost of goods, which is what the Asian market cares about. So I have a lot of COGS plays in my portfolio, and I have to deeply care about, can this be rolled out in Asia broadly? And I will leave you with one more thought. The US healthcare system, which spends 18% of GDP on healthcare, is the world's most inefficient healthcare system. The outcomes are worse than anywhere in Europe. Italy spends 6.5% of GDP on healthcare, has nearly 15 years longer life expectancy for many places. What does this mean? This means that the ability of the US market to pay for its medicines is decreasing over time. There is no other way. The US cannot afford the current level of spend, and their population cannot sustain that. Europe is likely to be directionally flat, so the source of growth is Asia. So you have to long-term think about the global healthcare market as equilibrating globally, regressing to a global mean. And I would argue that the global mean is going to look like Europe. 6, 7, 8%, strict price controls, really difficult price negotiations. The froth is going to go away. So if you want to be a therapeutic startup today with go-to-market in 10 years, be relentless on your cost of goods. Otherwise, you have no future. This is kind of my core message.
Maybe, Chris, at Novo, you see a very broad span, right, of stage and geography. How do you respond to Chet and Dima's contentions here?
Well, it's an interesting perspective you guys share, and I don't disagree with most of it. I think some perspective from our side, even in the short term, we're basically a single LP fund. We're almost almost like a sovereign wealth fund in some ways, the way that we support certain countries in Scandinavia. But everything that we're actually measured in DKK, so Danish kroner, but more than 50% of our investments are actually held in the United States. So imagine how that actually spanks us, right? In terms of just looking at the valuation of our portfolio, just a Forex exchange effect is pretty significant. So we have to keep that in mind. But nevertheless, we keep on, pouring money into the United States because we see that, at least in the short term, medium term, that is where most of the market is, both medtech and biotech. I spent about a third of my career, investing into Asia, primarily into China. In the last couple of years, as you probably have seen, there's a massive amount of decline in the market cap of some of these biotech public companies in Hong Kong. Volume-based procurement has been punishing. A lot of that, you can argue where that come from. Maybe the Chinese government spent too much money on COVID at some point in time. But those effects of cost cutting are not going to go away. once it's happened, it's going to stay there. And so, we're, what we've seen, at least in this short and medium term, is that a lot of the Chinese companies don't even want to sell in China anymore. They're all looking for overseas markets. I think Europe might be a great market for a lot of these, drugs. Yeah, it is, right? They're probably, U.S. is a little bit more protectionist, or maybe a little bit more snobby about, accepting, Chinese-made goods, but is probably going to be coming as well. And there's various ways that they're trying to do this, right? Some of these, as you probably have seen, there's been a huge, trend now of outpouring of assets coming out of China for the rest of the world. Big Pharma is literally shopping every day in China for assets. The smaller venture-backed companies and VC firms, there's even VC-backed search codes that are looking for assets out of China as well, earlier stage, right? So across the whole kind of spectrum of development, there's potential takers for some of these, assets. And, what does that say? I mean, the science is very, very good. If you asked me 2 years ago if I would have seen this trend coming, I probably said no. We still probably were going to be 5 years away. But, this again goes to my whole thesis that everything you think is going to take X amount of time in the normal world takes about half that time in the China world. So that's kind of what's happening here. How is that going to play out in the time frame of Dima's fund? I'm not too sure. I mean, maybe, and we don't know, right? The market could shift back to more normalcy in Hong Kong. The companies could do perfectly well just developing products for China and rest of the world. Those things could all happen. So we're just keeping an eye on it. I've been through several, boom and bust cycles. One thing I can tell you is that the world doesn't end. Things do, equilibrate, but you always have to be adapting. And it's not always going to be business as usual. This is just another, I think, cyclical period we're going through, but, you got to just adapt. If you don't adapt, you're not going to survive. And that's investors as well as entrepreneurs and academics as well out there. I mean, we're facing unusual pressure across the board. But I always say the demand for healthcare goes on. There's is an insatiable demand for healthcare. That is one thing we can always say. Why do the investment banks love this industry? Because we just keep on wanting more money to develop more things. Anyway, I'll pause there.
So maybe...
sorry, can I just say one thing? An LP asked me last year, has there ever been, because the healthcare is a very bottom of Maslow pyramid, maybe not as MPEC, but an LP asked me, hey, has there ever been a case when the global healthcare spend contracted? And I said, ever since, and I did the research, ever since the people started measuring or trying to estimate the global healthcare spend, there's been 1 year when the global healthcare spend contracted, and that was 1944. So it required 5 years of a global war to contract the healthcare spend by 2%. That's it. There's ever since, before and after, the global healthcare spend only grows. That's it.
Okay, thank you, Professor Khatib. So I'd love to hear you speak about the implications for innovation, technological innovation, particularly in your area, and how it may affect, how the geopolitics are affecting.
Well, the disturbances are here for sure, but innovation continues. And in fact, all these technologies are global, and we cannot just look at one area of development. It is taking place all over the world, in Asia, in Europe, and the US. And we have a lot of connections. Disturbances to conferences, disturbances to students, disturbances everywhere. But still, the innovations are ongoing. Just recently we developed a new way of performing brain surgery with the smallest, tiniest robot you can imagine. So how can you perform a brain surgery with a spinner of like 1 square centimeter or millimeter? So how do we do that? Well, we integrated magnetic field control to move. So this is actually, Marcelo, you remember we worked on this before in different technologies, but now we place it in the bloodstream. It goes all the way to the brain, and you control it using a magnetic field. Another robot is from outside, and you do the whole surgery without any opening or any intervention on the human. It's amazing. We are deploying now robots in villages to perform ultrasound imaging from thousands of miles. It is a combination of technologies that is coming from advances in ultrasound imaging with robotics, but also the connection to those robots through interfaces that are using the internet. Despite the delays, you have delays. We develop techniques that make use of dual proxies to place in both sides, and then we have autonomous scanning of the patient in a village. And if we detect through AI there is any suspicion of a problem, we reconnect the patient all the way to any hospital where there is a radiologist available within 10,000 miles. This is transforming, in a way, the internet from a tool to hear and see to a tool to touch and feel and interact with different applications, patient or others. So I can assure you that we are still working on advancing innovations. And
May I ask you, just, because from the other panelists, there's been an emphasis on cost of goods, right? So as you're innovating in this space, do you think about, how do you take into account, the cost of goods for, let's say, this brain surgery fantastic voyage robot?
Yeah. Well, I mean, we did have to reconfigure a lot of our purchasing places and manufacturing, and it has been not an easy transition, but I think in the short term it's maybe really I mean, there will be a lot of disturbances, but looking at the midterm and the longer term, there are a lot of changes that can be also expected to come and to restore a little bit of sanity.
Okay. All right. Well, sanity is much appreciated. I think that's why we're here in Singapore. Okay. So maybe going to more industry topics, so focused on the state of our industry in terms of financing. So we've seen in the headlines in the past 5 years have been an exceptionally volatile time for life sciences and healthcare, from the highest highs around, pre and during COVID, to one might remark as the lowest lows, maybe not as low as some past cycles, but we're in a trough right now. So I wanted to maybe start with Chris on this topic, because it's been close to what you're experiencing on a global scale. The questions are, have you seen this as a volatile time period? Is that, are the headlines accurate when we read them? Where do you see the industry headed in terms of near term, right? So are we in for a longer winter, or is spring around the corner, or are we headed for something else that we're not, you mentioned you don't know, but we don't know. None of us have a crystal ball, but how do we where do you see this from your global perspective? And, are there fundamental or structural barriers or enablers that might influence, the changes, future growth, or the pacing thereof?
Yeah, it's a great question, and you can go down a lot of rabbit holes with this one, and I think it really depends on the perspective of the type of investor. You have smaller size funds, maybe focusing on early stage. You have later stage funds that could be larger check sizes. So there's a whole ecosystem here. I think they're affected differently by the markets. I mean, we also are a slightly different animal as well. We're a very long-term investor, investing out of one kind of large evergreen kind of pool of capital. So even though we're probably a little bit more insulated from some of the day-to-day gyrations in the market. That being said, we do have a public portfolio as well that we actively invest. So that's kind of mark to market every day. So we're definitely feel that, and we're not blind to all of this that's happening. I don't know how many people here are entrepreneurs or if they're more investors, but the advice I always tell companies, especially when there's uncertain times like this, probably any time actually, it's just you got to raise more money than you probably think you need, and that is probably true, right, for everybody here, right? Raise more, right? Don't be so dilution sensitive about this type of thing. The public markets for biotech have been really punishing, so that's for sure these days. So you got to be able to weather the storm. But at the end of the day, I think there is going to be value creation with the outcomes of clinical trials, with discoveries. So that I think is still constant. You create value that way. Investors, there is money out there. I mean, we just, completed a, like $200 million financing just recently, for, an, early clinical stage, company. I mean, the money is out there, and the rounds are mega size, for some of these deals. So those are still happening, for sure. On the medtech side, I, just led a $120 million financing of a company that's pivotal, trial stage. So if you go after the right types of opportunities, there is definitely interest. And we, created a syndicate around these opportunities very quickly. We led both deals, and the syndicate coalesced very quickly around these opportunities. So I wouldn't lose hope. There, for the right types of opportunities, there is money out there. I think, to your point about like what's going to happen down the road, I really do, wish I knew better around that. I think just one concept for people to really understand. I mean, it seems very obvious, but it's all about assessment of risk and reward. That determines what our actions are as investors. Do we go to a certain geography more, or do we invest in a certain stage more, or less, right? Depending on, or a certain sector like vaccines. We saw an incredible vaccine company that had fantastic phase 2 data, but it was right around the time that there was a little bit of dust up at the FDA around vaccines, and the risk, profile of that. And when I mean risk, it means uncertainty. We just didn't know how long it was going to take to get this approved, or if we would run into certain roadblocks even to get clearance to start like a phase 3 study. So, and it wasn't just us. We had a lot of enthusiasm to do it, but we couldn't get a syndicate formed around this. So we even tried to, improve deal terms. But at some point, there's just, kind of you just can't go far enough to get it done. So these type of situations do happen. That's kind of the reality. If there's enough external pressure on a certain sector, it will cause people to probably change direction. And I think that's what entrepreneurs do. That's what investors do, is you try to find that path of least resistance to try to get to your goal. Sometimes it gets so tough that you say, well, I got to change my goal. If I can't go up, around, or over something, then I got to find something else to do. And that can happen. So, but recognize that if you entrepreneurs are thinking about this, we are also thinking about where we can deploy capital and also reduce risk and maximize returns for our investors, our LPs as well, just like you guys are.
Yeah. So maybe just a quick commentary. So, speaking of de-risking and risk assessment, so in Malcolm Gladwell's book Outliers, he has an interesting hypothesis on entrepreneurs. So often people think about entrepreneurs as risk takers, but his premise is that they are actually very interested in opportunities but hate risk. And so they do everything in their power to de-risk when they see an opportunity that they like. So it's just a different spin on risk-taking and entrepreneurship.
I'm a seed investor because I'm so risk averse. Then rather than sticking with one startup, I can start 10 startups per fund. That's even better. I hate risk. So I do pre-seed investments in therapeutics. So none whatsoever. So anyways, I think you've just heard a great definition from what I would call a mid to growth stage investor, right? So your horizon is like 3 to 7, yeah? My horizon is 10, so everything that's going on is weather. Like literally. Because in 10 years, it's going to change 3 times. So the moment I start caring about that, I'm done. Like I don't have a fund anymore. So if you're embarking on what will be a 10-year road, i.e. you're making an early stage therapeutic startup, like you cannot afford to think about that kind of stuff at all. You have to be conscious of what is happening in the market fundraising wise. Yes. So you need to pick your investors well. You need to figure out who the long-term directionally aligned investors are with what you're doing, know them very well, cultivate them over time. And then you also need to understand and build relationships with your evergreen, very deep pools of capital like Novo and others. And that is important. But caring about the weather leads you nowhere. So what you should really be caring about is the climate, right? So what is the direction of travel? So the direction of travel right now, and you have to remember, looks very different from the weather, right? So assessing the weather, biopharma financings, venture financings across all stages this year are at their lowest level since 2012. So 2025 will be roughly equal to 2012 in USD amount, not adjusted for inflation. So this means realistically we're below 2012. Every year since then has been better. The financings of preclinical biotech companies are down 97% from the peak. So the world looks terrible if you're an early stage company. Despite that, we're 2 days away from closing a $95 million Series A for a preclinical creation startup. So yes, the deals are happening. Even for preclinical companies, they're happening. But the market is much more concentrated into the world of the haves and have-nots. Now, I very often hear the silly notion that, but the M&A is going to flourish, is going to bring the market back. And that's complete BS, because the M&A has actually been fantastic. So the biotech delivers on average $63 billion in M&A per annum, if you exclude the mega mergers. And every year, apart from 2024, has been above average. The best years on record have been 2020 and 2023, a very low rate year and a very high rate year. And this year will be above average. So overall, the M&A market, which is the climate, is very healthy. Why is it so healthy? Is because of the patent cliff, right? The 20 major players need to return
to recoup more than 260 billion in falling out revenue from the patent losses over the next 5 years. As 5 major pharma who are losing more than 20% of earnings per share and more than 20% of sales. Now, you would argue, but surely they have their own innovation. Surely Novartis is such a massive research engine. Surely they'll get something. But the reality is for the majority of the top 20 pharma, the returns on internal innovation are zero. Right? If you look at the top 20 pharma over the past 15 years across all of their approved medicines, only 28% have been developed internally. Everything else is in-sourced, in-license or acquired. So this means there's a fundamental demand for M&A. And that's not going away. But the fundamental demand for M&A does not really feed growth funds. It feeds early stage funds because the early stage funds are more geared towards having significant, meaningful returns from M&A deals. Historically, especially in the US, the growth investors are geared towards listing their portfolio companies. And the public market has been dead. Now, why is the public market dead? And is that unfair, as many people argue? I think it is very fair because the public market in biotech is a rates play. So when the rates are high, the public market will be dead because if you do a risk-adjusted NPV with a 16% cost of capital going forward, an NPV of any phase 1 asset is 0. And that or very, very close to that. So all these biotechs B2B trading at cash are basically fairly valued. So as a result of that, there's very little reward for public companies, and there's very little reward for the Deerfields of the world to list their portfolio companies. As a result of that, they're stuck. And so what we've observed over the past 4 or 5 years is that the growth investors are stuck with massive portfolios, have to turtle up and keep feeding their babies, so they can't do the early stages, which led to the collapse of the market, which means that now the early stage guys are left picking up some of the tab and stepping up more, doing more of the growth stages. So directionally, because of that, I think where we're going is the rates are coming down. I think we're all agree that the rates are coming down. As the rates are coming down, XBI is going to go up. So as the XBI is going to go up, the public market will unfreeze somewhat. Now, if you ask me, hey, Dima is going to go back to 21 level, is going to be as crazy. I don't think so, because 21 was really crazy. Internally, we use a very brute force measure, but it delivers to us. Yeah. So you take an average ratio of the current stock price. You can do a 28-day running average with what we do and compare it with the 12-year broker forecast, stock by stock. And then you take an average. So basically, how are individual stocks valued relative to their 12-month price consensus? Q1 21, it was 70%. So the stocks were valued at 70% of their 12-month targets, which is actually the highest ever. It's never been higher than that. Even though the dot-com boom has not been as high as that. So I don't think we're going to that froth. But I think the market is going to recover somewhat. Now, will the venture funding recover as quickly? The answer is no, because the venture funding is sticky, because venture funds raise on a 2 to 3 year cadence from LPs, and the LPs have not had their capital back from the private equity funds, which they care much more about than the venture funds. And so that will require the rate lowering to feed through to KKR and Blackstone, all these guys, for them to have the money back to the LPs and then for the LPs to reinvest into venture. So that's going to take a couple years more. So my kind of reasonable weather forecast is that the venture funding will be better in 27. 26 is probably going to be roughly the same as it is, or marginally better. But the public markets probably would be a little bit better in 26 just because the rates are going to come down.
Thank you. Yeah, so I was going to ask you, Professor, since you're working in the earliest stages, in the innovation stage, and as you spin out your technologies into companies, do you see changes in this landscape, especially coming from Silicon Valley, which is among the most robust, if not the most robust ecosystem? How do you see this affecting you?
Yeah, this is a very good question. About the weather. AI is very good at predicting the weather. We have a lot of data. I'm not sure about how we don't have enough data to predict a situation like this. I'm not sure how AI can solve it, but probably a human being can answer that question.
Yeah, more than the AI, I would argue.
Yeah, I think so. Anyway, it's a very, very good point and comparison. To go back to the Silicon Valley. I mean, the Silicon Valley is an amazing place because it is also a bubble within the US. We are not like any average other place. So, for instance, we have very good food. We have all the European, the Asian, the cuisine we have the secret mixture of enough of innovation coming from universities, but a lot of investors and entrepreneur really interacting with the research. So, for instance, engineering school and the business school, they have common courses. Our students are taught to think about how they can take their work to the real world. And this backfired during the .com. It went very fast, and it was like a lot of our students left actually the Department of Computer Science because at the door of the department there were many investors waiting for students in computer science. Are you student in computer science? How about a job for? And we started to see all these beautiful sport cars in Palo Alto. Palo Alto was completely like taken over by all the investment. I mean, the good restaurant became more like business-like restaurant. But we recovered. I mean, it is amazing how the Silicon Valley functioned, but the Silicon Valley kept growing, and the secret of it is really this really close connection, and this is what I'm seeing the seed of here in Singapore. I really think Singapore is in a better place, even in this current situation, than many other countries. It is between China and Europe. It is a place where a lot of maybe new investment is coming and new connections being made with the West that that were always there, but it seems there is some acceleration of that that mode of interaction. It's playing an intermediate between the East and the West, I think. And now the Silicon Valley is rather than geographic Silicon Valley, because you have in Austin, my students started companies in Austin, and many other companies are starting up in around Austin as one area. I mean, one example, but we have like the big bubble and the smaller bubble all over the US. And in every case, we can see how the creativity of and entrepreneurship is managing those startups. So, for instance, I think in the car also this morning, I was talking with some investors in one of my students' company in California, and just like talking about how amazing the progress and the growth and the development and also the field of application that they are foreseeing. So I think really I agree with you that we really need to look further than just what is happening today and see where we can make a contribution. I really think the academia will survive the turbulences, but in terms of the medical applications, I think must is now in. You know, minimally invasive surgeries and all the procedures that are 100,000 of procedures done a day with those technologies. But there is also a lot of connection today between the study of in biology and biocomputing that is bringing a lot of new tools to accelerate what is going on. So this is something you know about. I mean, the ways we are accelerating our understanding through biocomputing, and there are techniques that are coming from search, uncertainties, and how we deal with the navigation for autonomous car that is being applied to discovery of new drugs by better understanding the proteins in those drugs and creating new vaccine. Many of the techniques that we use in the field of AI robotics are also found in those areas. So there is something that is going to emerge from this acceleration of AI robotics applications to other fields, and to really helping not only the micro level, but also helping humans as we better understand human motion, human behavior. We are able to prescribe new routines to improve posture, to improve, to reduce injury, and all of these things. It is really amazing, the connection between all these technologies. So there is a good, bright hope at the end of the tunnel.
Thank you.
Can I build on something
Sure.
Oussama was saying? I think we talk about technology, but it comes from people. So the human capital part of this, we cannot lose sight of. In fact, when you talk about Silicon Valley, why do people come? For all the good food, the good weather, and that draws people there. I mean, that's one part of it, but it's also collectively all the other people who are there, and people want to be around other dynamic, entrepreneurial people doing very innovative things. I think that, Stanford's smack dab in the middle of all this, and that's why people are drawn to it. But I think if there's pressure on immigration, et cetera, on the funding of academics, then other places might thrive more. Singapore, I think, is one of those places where there's such a diverse melting pot of different people coming in here. And I really believe, from all of the experience we've had with biodesign over the last 25 years at Stanford, 15 here in Singapore, we always bring together a diverse group of people with different points of view, different life experiences. And that really, I think, helps spur that kind of innovation. Everybody thinking the same way, I don't think you're going to get the best ideas coming out of it. You need to have that kind of friction, that challenge amongst different people with different experiences that they can bring to bear. I also think, if I look at, our portfolio of companies at Novo, how many of them, have senior leadership that are, first-generation immigrants? A lot of them. And I think there is, these are people who I think are much more willing to maybe tolerate risk and do the hard thing. And maybe they have, they just have that kind of spirit to do it. And that is a really interesting, resource. I don't think we sometimes kind of gloss over it and just don't really think about it too hard. But the people make all the difference in these companies. I'm sure all you guys agree with that. But, that whole talent base could also shift as part of this whole, moving of the zeitgeist.
So actually on the talent piece, I think it's a great segue to Chet, because we were talking over lunch about the importance of understanding the clinical provider landscape and the roles within that, the patient journey. These are all like human interactions that drive clinical adoption of whether it's technology or new services or new models, ways of delivering healthcare. So maybe Chet, if you can talk about that aspect of it, how the changes in the landscape are affecting human talent or your talent capital, and how you look at healthcare technologies. So, Paul, your boss and CEO of 22 Health, told me that 22 Health was doing all the non-molecular parts of healthcare. So I don't know if that's accurate, but services, digital, and some medical technologies as well.
So I think that's a very deep question, and I wanted to also kind of connect to, I think, what the other panelists has been sharing. So as they've been talking about investing, they talk about technology, talk about human capital. The one idea that came to my mind, and I think it's also relevant for the audience here, is this concept of opportunity costs. So if you think about it, like from a LP or from a GP, it's like where you deploy your investments is like in this period of time where you have that active, dedicated allocation, right? It's in a way a opportunity cost equation as well, right? Same thing with, when you're trying to develop innovation, you're trying to bring it into the market from R&D to commercial. And also I think for many of us here, just trying to bring in the audience as well, you're thinking about your own personal careers and your opportunities. Should you make a jump to being a founder, or should you remain like a technical expert? It all comes down to this idea of opportunity cost, right? And I guess risk management, which I think was mentioned, is very similar, but bringing it to, I think, your question in terms of how does that innovation get brought into practice, I think the term opportunity cost is a more holistic way of looking at it. So if you think about how healthcare itself, it's carried out, right? There's to me, the three components where you talk about the provision of the service or the care, which includes how do you fund the activity and how do you provide access, right? And it could be on one hand very infrastructure heavy, building new buildings, for example, hospitals, specialist centers, to kind of if you have a mobile phone, can you use it to provide access to care? So that whole spectrum is a provisioning. And I think related to the biotech conversation in terms of even the med device, it's all about we call it the production, right? So from provisioning to production, which is manufacturing, import, export, supply chain, cost of goods sold, innovation, licenses, all that stuff, right? And I think where I'm mostly more closer to because of my origin, so the last P I would use is the practice of care, right? Do the nurses actually find what is offered actually useful, right? Because without going through the nurses, you can't maybe even interface with the patient, right? Or does the practitioner or the doctor actually trust this new technology or this new capability? And a lot of times you'll be surprised that from the different stakeholders, they find that they're bringing value to the equation, but to the people within the industry, it's a hindrance, it's a risk, right? It's something that I'm not willing to take part. So hence here, it's all about opportunity costs, right? Are you passing on something that's going to improve your outcomes or your patient experience? Or are you actually paying too much into taking on the risk that will end up as a trouble, right? So I think now if I may borrow from Dimi, right, thinking 10 years ahead instead of just 3 years ahead, the question is, beyond healthcare, how are we actually going to be behaving? What is the future of work, or what is the future of providing healthcare altogether. Because don't be surprised that it could be completely different, right? If you just take, I think, where AI is going from a tool, it's become an assistant, and very soon, probably 10 years from now, it will be like literally a colleague or a fellow practitioner, but non-human practitioner in the space. So when that scenario happens, the opportunity cost completely flips. The risk and reward equation completely flips as well, right? And that also will influence the way we develop technology for healthcare specifically, how we are thinking about investment returns, and I think how the actual talent in the industry will be, right? So today you think, okay, doctors, nurses, healthcare practitioners. 10 years from now, what about technologists, right? What about research? What about tech biologists, right? It's a new field, by the way. So in fact, the degree might not even exist, and probably Stanford's going to, launch it soon, right? So I think we are at a moment in time where, frankly speaking, healthcare has not changed for many, many hundreds of years, right? And we built our entire body of knowledge based on, let's say, the 5 senses. Yes, doctors used to probably taste some body fluids long time ago to make a diagnosis, but thank God we have labs to do that today. But what if the future requires like 200 data points to make a decision or to manage a person's health, right? And keyword here is manage health, not manage illness. So that will actually change completely the way we think about technology and healthcare, right? Or maybe there's no such thing as technology and healthcare before. It's just like the way we are, right? The future us. So to me, that is kind of the journey, but it's also the challenge, because we are actually just crossing the divide at this point, right? Yeah. So I think it goes back to our conversation about, you have the healthcare planet, you have the technology planet. They're literally smashing into each other, right? So sounds very dramatic, but I guess in reality, it's much more calm and peaceful, hopefully. So this new form, this new mass that will exist, it might shed some matter, it might form new creations as well. So that is, I think, where we are. And for all of us here, for the next 10 years, probably very exciting times, right? So I think that's the whole point about this panel as well, right? Yeah. So.
Yes, go ahead. Thank you. Thank you,
Yeah,
Chet.
I just wanted to comment on the AI. I really hope AI will be an augmentation to human, not replacement. And I think this is a very important message we should have, that there is a lot of speculation, a lot of discussions about how far AI can go, but really the AI usefulness is in the context of a human and life. And I think there are a lot of efforts right now to recenter AI. So at Stanford we have the human-centered AI, and it's a center,
responsible AI?
The institute, yeah. Well, there is responsibility, ethics, and everything, but after all, so far AI is providing amazing tools to human to access information, to synthesize information, but still the human is really the there for the decisions, for the final say on what we do. So I hope we will not reach that point too fast without everything. But the main point that you are bringing, and I think this is really going to be important, is policies. So how can we adapt our policies to accommodate those transformations we are seeing today? And this is something that is going to be more and more important, and with a lot of argument. For instance, today, if you are across the border from a state, between two states, you cannot get advice online by a doctor. So I'm saying now I can take the hand of a doctor and take it all the way to another country. I mean, so we need to reformulate our understanding of what we are doing and who is monitoring and how we deploy those technologies. So technologies, ethics, state policies, and federal policy, and then universal policies that are going to be needed.
Okay, thank you. So I think we've kind of covered this next question, but I'm going to ask it anyways, just in case there's some additional thoughts we might have. So obviously, we've been hearing a lot about integration of AI and ML across the board in all industries, but particularly in healthcare, and we're seeing it really seep into, and even, might I dare say, dominate, some verticals within biotech and healthcare, discovery to manufacturing to clinical care. And my question is always, will this technology actually enable us to do more with less? And will it help us orient ourselves towards health rather than acute illness? So promoting health, preventing illness versus, treating acute disease. So I think these are the big questions for population health, for policymakers, for countries that are facing, declining healthcare budgets or constraints, and also aging populations. So maybe we can start with, I'm looking at all of you are more than equipped to answer this question, but all right, we'll start with everyone's pointing to you, Chris. You start with you.
Yeah, thanks a lot. Well, hopefully then I can say whatever I want. Then
Go for it.
Nobody else can repeat what I say, right? I think that time, a lot of this technology is evolving so quickly. I mean, I was sitting in the car with somebody who was way more experienced than me and on the AI side over here last night from the airport. I think, we were kind of remarking that AI is probably evolving slowest in healthcare compared to some of the other areas, like coding is just blowing up. It's amazing how fast that is taking off as a real industry, making real money compared to what we're doing. I think that, from our perspective at Novo, for example, on the drug discovery, we've seen a number of these companies that are doing, AI-assisted drug discovery, and we just haven't, pulled the trigger on it because, well, number one, the valuations are crazy high, and then number two, I don't believe, although we believe that it accelerates certain aspects of drug discovery, you still hit the major speed bump once you get into clinical. Mm-hmm. And that's where, we live, is in that space. And so, yeah, you might get a compound or narrow down your funnel to a compound that you'll take into the clinic, but then you still don't know what you're going to get. And then we just say, if something fails, we say biotech happens. Sorry, and that happens a lot. And we're not, until I think they come up with a truly artificial human, like a digital human that virtual human that you can model all of the, metabolic processes and also all the pathology that's happening and all the interrelationships. I mean, you are still going to be in for a surprise sometimes. You just don't know. I don't know if you agree with that, but I think, perhaps on the medtech side, we might see more development sooner. And this is something we've been thinking a lot about is, compared to autonomous vehicles or even deep undersea robots. I mean, the environments that we would use robots in are much more predictable and stable. There's actually far fewer outcomes. Bad stuff can happen, but you kind of know what those are most of the time. But still today, I would say we're not quite there. Even the largest company in the space, Intuitive, they're very adamant that we're not about autonomous robots. We are about enabling surgeons to do procedures better, faster, whatever, but we don't do autonomous. At some point, I think that could shift quite a bit. And I don't think it's 5 years. I think it's probably even sooner than that you're going to see this, is my guess, at least in certain areas. I mean, even around more minimally invasive catheter-based procedures, you're seeing, capabilities where they can, steer these catheters or do certain types of procedures faster. There's better decision making around it now because we actually have ways to analyze like a vessel before we do like a stent procedure. So are we going to, create a, downstream embolic event because it's a vulnerable plaque or whatnot? We have that information now, and we're seeing imaging happening more often in these procedures, whereas I would say even a year ago, people were saying, I don't, image these vessels more than, 1 out of 10 times before I, throw a stent in there, which is kind of scary if you think about it. We have all the technology to do this, but it's also the practice, and the habits that these doctors have, the training that they have. So there is that friction, right? You don't, as I kind of joke sometimes, like you don't want a neurosurgeon being too creative about the way they, do neurosurgery because that would be bad, right? I mean, so you want them doing the same thing all the time, but to do innovation, you need to have a different way of thinking. And I think that's what we've always been teaching at Biodesign is you got to have that diversity of people. You have to have the people who know the subject matter really well, but you also have to have sort of the neophytes who are able to question, what the status quo is. And we also say, hey, look, it's not about technology push. It's always about, need-centered, clinical need focused first, and then find the right kind of technology. So maybe AI is one of those, but there's other things out there too.
Yeah. Interesting. Well,
I'll be controversial. Okay, so I'm probably I'm definitely a mutant, but this particular mutation is like I'm probably one of the very few people on Earth who have been deeply involved in neuronal networks in their academic career and do nothing with AI. DeepMind was founded 2 doors down away from me at UCL, and I'm a cognitive neuroscientist by my background. So I am what you could call an AI skeptic, right? Because people hold up the examples where current large models are exceptionally capable and hold that up as a generalization, which I think is utterly wrong because it misunderstands the basic mathematical principle of how these models work, right? So if we start enumerating what the large models that we currently have are good at, we'll very quickly run out of fingers. So they're very good at folding proteins and also lately modeling to some extent the dynamic interactions within those proteins. And remember that builds on 70 years of X-ray protein crystallography and on, at the very least, 40 years of computational science has gone into that to quantify MRI, protein MRI, right? So, and other structural studies. So that is not a magical conjure-up innovation. And people have been doing machine learning and MRI structures probably 40 years at the very least, since random forest, right? It's been a very long time. It is very good at image analysis. That's because it's a technology that has been originally developed for image analysis. And yes, it is better than any human at image analysis, same as it is at folding proteins. And so if you ask the question of where is the highest probability that is going to enable us to do more for less and bring us towards healthier lives and more prevention, I would argue the only credible place is automated imaging coupled with AI, right? Like if we can get to a point where in elderly care, in other settings, where you can get an ultrasound robot with a built-in AI radiologist that places a call into a hospital if it spots something, yes, that is probably the only credible place. And the third is the large language models with their abilities to synthesize to some degree information with some degree of hallucination attached to that. Literally nothing else. There are no other credible uses for large models that are not error prone to an extent that they are better than human today. But people hold these 3 things up and say, oh, but AI is the future. AI is going to take over the world. Nah, it's not. So, and I think Chris hit the nail on the head when he said, like, people hit the roadblock when they get in the clinic. They actually hit the roadblock much earlier than, in my opinion, they hit the roadblock when they get development. Because if you look at all those companies in Silico, Benevolent, like all those great guys doing AI drug discovery, the moment they step into development, they become a normal drug development company. And so all of them then became robotics innovators or heavily reliant on robotics innovators to parallelize their development pipeline so that they can also claim that they're faster developers, but that is not due to AI, that's due to robotics. And Roche has the same robotics, I'm sorry. Yep. And so that is the reality. It really speeds up the funnel discovery. And that is interesting because what it's going to do, I think it's going to do damage. It's going to make life very difficult for anyone who wants to develop small molecule drugs. Because you found a good target, you drugged that target. What is now stopping 25 Chinese and Indian companies from using AlphaFold and cheap chemistry generative AI, because you publish it for Makafor in your patent, or having the same thing, put an IIT in China, and whoops, they're ahead of you. Yeah? So that's a problem. So, and for the investors, it also brings a problem because how do I know that this inhibitor is the best possible inhibitor for this particular target? Now, I don't invest in small molecule inhibitors, so I don't have that problem, but it's a problem for my friend on the left and for a lot of other people. So I think the last 1 minute, yeah? Paul, average question. So the UK has the NHS, the world's biggest single payer healthcare system, highly centralized. What do you think is the average time of adoption of any new standardized medical protocol or procedure between the center of excellence, let's say Great Ormond Street Hospital for Children, and wide adoption across the NHS? Is it less than 10 years or more than 10 years? Vote. Like less than 10 years, raise your hand. More than 10 years, raise your hand. Yes, it's 17 years on average.
Oh my God.
Now you're telling me that some fancy new AI-driven scan, which the Gosh is using, is going to change the world. Yeah, in 17 years.
Well, we are running out of time, but just I agree. I think it is there is a big hype about AI in every domain. AI is an amazing tool that existed before. What changed the tool is the computer power, the storage. Now we can store more information, data, and we can process faster, and we can get ChatGPT to answer some questions with a lot of errors in it and bad references sometimes. But we have to distinguish between robotics, the physical world, the physical intelligence, and AI, which is dealing really with digital intelligence. And thank you for pointing that point, because I mean, when we talk about intuitive surgical, they still have the surgeon there, and the surgeon is following visually the images of the surgery and operating on the patient. So through haptic robot interaction, small incisions, we place the robot, the camera, and from outside we're operating. This is robotics, and there is no chances. I mean, we know exactly everything, the range of motion, the capabilities, all of that. Now AI is bringing tools to speculate from previous data. There is no new knowledge. Everything is in the data. So essentially, the imaging is one of the most successful application because we have a lot of data. Medical imaging is very successful with AI. But when it comes to, folding, protein folding, AlphaFold managed to do some progress over Foldit and the technology that relies on citizen scientists working all around the world on the game called Foldit. And in that game, they discovered the protein of the COVID. They discovered other protein of other major illnesses. But still, everything AI can bring to those areas are very, very small yet. Yes, we will improve because we will get more data. It's about data, how much data you can, and we always say, we need more data. We need more data. So I'm fully with you in concluding that AI is a great tool. We have to be wise how we use it, and it is very different from robotics.
Should I
Chet,
just do a
last
quick
word?
one, 2 minutes,
Okay.
right? Yeah. So my view is very much more practical and more near to the ground. I think up to today in healthcare, we're still trying to break the iron triangle, right? The concept of cost, access, and quality cannot be had in all one go. My view is that if you think about technology, be it robotics, AI, and in the biotech space, epigenetics, genomics, all that, right? It's basically as if you are a practitioner, you're going from just your physical examination, and then you have a stethoscope, and then you have the ECG, and then now you have imaging scans, let's say for cardiology. It's just basically a natural advancement of the practice, getting better, quicker, faster, more access, and more accurate. So if you think about it, when you apply, be it AI or robotics into the healthcare space, as long as it's targeted at breaking the iron triangle, I think that's where we will accept the technology. With that said, one of the big barriers about tech and health is that breaking through from the digital world to the physical world. That means, can I touch or palpate a patient in a remote location?
Working on it.
Exactly. So this is where I'm a big supporter and big fan of Professor, because if he can create that capability, that's one way of literally breaking the iron triangle, right? And so is with be it using AI for imaging, enhancement, or actually guiding a doctor or practitioner to, let's say, a tumor that is probably only to be detected, let's say, 6 months down the road. But because of new technology, we get ability to detect it earlier. And of course, with that, the option to roll out treatment, it's also present. So it has to come together. So remember, provisioning products or therapies and practice has to align. And if you ask me, the very earliest stage where all this technology, in fact, might make a big difference is in a very boring space of healthcare operations. So literally finance, supply chain, and human resource. You'll be surprised how complicated a duty roster for an on-call medical team is, right? You need AI to do it. So with that, yeah, those are the real things on the ground. Thank you.
Thank you. Well, I want to say I would love to repeat this panel in 5 years to see where we are, so if the markets have recovered, if Dima is still skeptical about AI, if we figured out how to be responsible users of AI, and whether or not we see it literally in front of the patient in the clinic. So, but thank you all for your very, very in-depth and passionate statements on these various topics. So, so let's give a round of applause for our panelists. Thank you.
Thank you, Donna.
Yeah, and I'd like to open it up for questions. So I think our questions moderator will. Okay, we have two questions. I did threaten to call on a few people. Oh, okay. All right, here we go. All right. So, in no particular order here. Let me see. How ready is the current infrastructure and hardware in medtech to support AI growth? And what key compliance and regulatory requirements must be met for safe and lawful implementation? Okay. Maybe maybe Chet, since you're on the ground.
Okay. I think very quick and targeted answer would be, where is the data and how do we access and make use of it? Because all the technology is irrelevant if it cannot be down to the individual or to the disease that you're trying to manage. So I think we still have that area where it's a challenge. I feel that it's not there yet. And it's a very multi-stakeholder problem, meaning from the policy, from the infrastructure, from operations, and from even the practice, right? So, and there are a lot more people involved. So, I mean, just a very quick answer, and I pass it on to my panelists. To me, this is the big challenge.
Yeah, I would say it's still in development. On the diagnostics side for AI, there's a lot more leeway, and I think FDA has been more forthcoming about giving like a clearance for those types of algorithms. When it comes to more therapeutic approaches, there's I would say just kind of you have to go through the very standard type of testing. For example, there's a company I invested in called Element Science that is a wearable defibrillator. Here's another actually example where it's not, AI doesn't be this huge, large learning model. It's about very specific, yes, no around aberrant rhythms, and you train it on that. And obviously there's some real world things where there's a lot of noise or whatever, but it's basically shock or don't shock these patients, right? And they had to go through like a clinical trial where they looked at, it's actually very interesting. FDA actually didn't care whether or not they had a true shock. Like, do you, diagnose somebody accurately and they are supposed to get a shock? They don't care about that. They actually care about false shock. Like, how often are you walking around and it detects something and it's a perfectly okay rhythm and then it shocks you? Obviously, there's like a warning before that happens. But the point, they care more about that. So they actually had to do a longitudinal study to prove that over a period of time. So, I say we're all in this kind of environment of sort of learning as we go. But these types of technologies are very, very helpful, and that company got their product approved. It's on the market now, so it can be done. But there was quite a bit of negotiation with the FDA on that.
Okay, this is a question, I think, for the investors. What brought you to, so this is for Dima, the second question here, but I think any of us can answer this. What brings you to Singapore? Is it the market, the assets, or access to capital? Maybe all three. What's your view on Singapore biotech research, and what do we do to stay relevant? Pick one, because any one of these could be at least 10 minutes long.
So long story short, Singapore is the best hub in East Asia. So what brought me here is this the best hub to operate, to build companies out of Pan-Asian research. I think how my view on SG biotech research quality, the quality is high, the quantity is low. Singapore produces a little bit, about around 0.6% of the world's high impact publications in life sciences. This is insufficient to support a functioning biotech venture ecosystem. So how does Singapore stay relevant in a 10-year investment vision? Is Singapore has to make itself more attractive for other people from East Asia to bring their intellectual property here and build companies here. This is, I think, the number one requirement. The number two requirement is the lack of management talent in Singapore, the entrepreneurs. But this will get fixed. It will fix itself pretty much as Singapore makes itself more attractive for people to build companies here.
Okay, thank you.
I call it a port strategy. Yeah, and it's actually amazing because all of the support in Singapore is geared towards supporting a factory strategy, as in like we support Singaporean IP, Singaporean research, and so on. But Singapore, which is a trading nation, a port nation, doesn't support itself as a biotech port. So that's kind of the strategy I'm trying to push.
Interesting. Okay. So there are two questions kind of related to the same topic, which is how can investors help? ... Local entrepreneurs bridging the gap in areas such as CMC, and also more specifically to CGT, cell and gene therapy. So I think this is probably for our folks on the left, Dima and Chris, maybe to comment on, since you're, and also, well, I think 22 Health doesn't do investments in this space, but you might be able to talk about CMC. Yeah.
Sure. So happy to take both. Singaporean answer to the second question, can.
Talk to Dima at the break.
Yeah, like we're global investors. We have CMC contacts all across the world. We see 2,400 things a year where all of them do wrong things in CMC. Come talk to me. Cell and gene therapy and the transition to in vivo transduction model, that is weather. That is not the climate. Stop thinking about this. Okay? You should be thinking about what is best for the particular thing you're doing. Does it work in vivo? Does it work allo? Does it work, like, what is the best case for you? But the main thing that the investors have that the academics and entrepreneurs don't is global context awareness. Nobody is asking you to have the context awareness of the global market. That's my job. Your job is to find an investor with a global context awareness. And my job is to provide that to you. And considering my ties to NUS, my job here in this building is to provide that to you free of charge without an investment. So come talk to me. That's it.
I just say again, I mean, to reiterate what Dima is saying, I mean, find the right partner, financial partner. It's not just money, right? It's people with experience and contacts, relevant experience in the space you're working in. You know, we, in our private equity group, I mean, we actually, you know, own CDMOs and, you know, CMC capacity. So, and they're around the world. I mean, there's good places to do this, but it has to be appropriate to what you're working on. Don't, you know, or we can suggest something better or different. Geography also matters these days. So you got to be thoughtful about where you're manufacturing this stuff and where you're supplying it, how to get your company to the United States. Oftentimes, if you're clinical stage, you know, you might want to think about, you know, packing your bags and spending more time in your target market. Trying to dial it in from long distance doesn't work too well. We have a few examples of that where, you know, we've had to move people over or just, you know, have to find different management to really focus on that phase of the company.
Sorry. Okay. The way I like to explain this to founders is you have to imagine Singapore as an island that's just literally right next to New York. Because that's the mindset that you want, right? That you are truly global. Right? I mean, I'm using New York as an analogy of a global location, right? Because I myself have made the mistake of thinking, okay, I'll build a startup. I want to sell to Sing Health, or I want to sell to Tan Tock Seng or NHG and all that. But from an investor's perspective, that's the wrong level of thinking. You need to think about being global from day one. And I think what's great about the Singapore ecosystem now is if you have that curiosity and that hunger, there are people here that literally we can talk to, like physically, face to face. And the fact that we Singaporeans travel so much, right? We always go somewhere, you know, spending time in the markets that you want to target. And it doesn't have to be the US, it can be anywhere. But just be there, be right physically there, it makes a big difference. Because when you do your product design, when you do your strategy in terms of regulatory and all that, always think global first and then only go down. We tend to make the mistake of saying, okay, we'll take care of what's around us here, like literally 5 kilometers from here, and then only we go out. But it doesn't work that way when it comes to investments, right? So I think that kind of mindset is very important. You'll be surprised if you change this level of your view, you really run and build your company very differently. Yep, to Chris' point. Yep.
I mean, I think that you know, financial markets recognize Singapore as being, you know, like the international Asia hub now. I think probably surpassing Hong Kong. I mean, the view is, look, this is an international place. I mean, first time I came here, I don't know, 1997 or something. It was a very different mindset, but I think, you know, for Singaporeans as well as for people outside of Singapore, they don't think of this as just like a, you know, far-flung place. You're very connected to everywhere else in the world, and it's pretty easy to, you know, get from one place to another. I mean, we just came over from like California just like that. So it can happen. I mean, I was around the world like once already last week. So this can, you know, healthcare and disease, I say, like, look, it doesn't know any boundaries. So you guys shouldn't know any boundaries. You should be, you know, going wherever you need to go to get the job done. And you should be aware and, understand how regulatory systems, reimbursement systems work in different parts of the world. You're not just selling into one small market. It's not only China, it's not only Europe, it's not only US. You really have to think pretty globally these days.
Thank you. Excellent way to end the talk. So thank you again. Claps to our panelists. It's been a real pleasure sharing the stage with you.